Hello, hello, and welcome. Welcome to this 12th edition of the Natixis CIB INFRADAY, this edition, 2023 edition. We're very happy to have so many of you around this beautiful place, and the weather is with us, so that's fantastic. So let me introduce myself very briefly. I'm Cristina Balanos. I'm delighted to be presenting this event, and we have obviously prepared a fantastic, exciting program for this edition this year, and we will have interviews, panel discussions with experts coming from over the globe, so very happy to have them also. To launch this edition, I'm pleased to welcome the Chief Executive Officer of Global Financial Services, Groupe BPCE, Stéphanie Pey.
Thank you very much. Good afternoon, everybody. Very pleased to see how much people in this room. It's very impressive. And I think it is, you are part of our success in this activity. I don't want to go very in depth in the topics because Mohamed will do it just after me. But I wanted to tell you some of my convictions. We are facing, it's obvious, different revolutions, different technologic revolutions, environment revolutions, and demographic revolutions. And the common point of all these trends, these mega trends, these very deep trends, of course, it is the necessity to face them of new infrastructures all over the world on all these topics, social infrastructure, digital ones, and of course energy infrastructures. Having said that, the common point of your presence here today is that you are part of these transitions, you are active players in infrastructures, and the other good common point is that we are a bank very active in this topic. As you said, the 12th event for Natixis. And I think I wanted to say that I'm very proud of this capacity of our bank to deal with this very important capacity of financing the transitions all over the places, all over the world, in all the activities. So I'm very glad to have all of you around these tables, all of you in this room. I'm sure that the day will be very profitable for everybody, that you will have multiple occasions to speak, to elaborate of all the topics of today's and of tomorrow, because we are also preparing tomorrow. We know that infra is a long-term development. So make yourself as if you were at home with us in Natixis. We are invested in this beautiful site with beautiful weather, which is not probably a very good sign of the change of the climate. But of course, we are very happy to be with you this afternoon. And I will let the floor to Mohamed, and very glad to introduce this day. And thank you very much to have come to meet and to exchange in this very important subject that is the infra industry. Thank you very much, everybody, and have a nice afternoon. Bye-bye.
Thank you very much. Thank you, Stéphanie Pey. Please welcome the global head of Natixis CIB, Mohamed Kalala. Let me ask you a couple of questions to give us a little bit of context. What are your views on the current economic environment? That's a very direct question to start with.
As usual, it's never the first question that is the easiest one.
Of course.
From you. First of all, thank you for being with us today. It's an impressive people here that are actually the most important stakeholder, the best in class in infra business. So thank you for being with us today. Actually, as a bank, we really need to worry and to take advantage of the volatility of the markets. And today we have many reasons why the markets and the environment is highly volatile. Of course, we have transitions. We'll go back to this. Energy transition, digital transition, social transition as well, with working from home, but also we have macroeconomical changing environment. We know that the central banks drew back trillions and trillions of dollars and euros over the last 18 months. We know that we have high inflation and the central banks are increasing the rate to tackle this inflation. And the drivers of the inflation are not that easy to understand. Of course, we have oil and gas and the Russian crisis, the Ukrainian war, of course of that. But on top of that, we have a deep conviction in the different government and supranational institutions that we need to have stable supply chains, what we call stable supply chains. This feeling started at the COVID crisis. We need to have local production, at least a minimum of local production. And this feeling strengthened with the geopolitical risks. What does it mean? It means that when we used to manufacture, let's say, 1 million units in China to serve all the countries across the world, now we're going to have 10% produced in Europe and maybe 10% in North America. Do you think that the cost of production of 1 million units will be compared to a cost of production of 100,000 units? Doesn't work. I'm not even talking about the cost of working, the wage in North America and in Europe. But the economy of scale, we are just today, we will have to face the inflation coming from the deglobalization of the economy. We took advantage of the last 40 years of the globalization, of the scaling effect. Now we need to go on the opposite way, at least for some industries. So we have inflation, we have increasing interest rate, and you know that interest rate and cost of liquidity are a main driver for the performance of infra business. So we have macroeconomics, we have geopolitical issues. Actually, we have a highly volatile market, which means more work, but by far better opportunities. So this is why I think that when you have expertise and you have connectivity, like people here, we're all connected together, we are able to identify opportunities and make deals real. This is what we are trying to do with you, is put together the know-how and the expertise and select the most relevant people to do a transaction, and let's make it real. So this is why we are here.
So in this environment, what is the role of infrastructure?
It's just to be very marketing guy, infrastructure is everything. I mean, it's actually infrastructure is the backbone of the economy. Infrastructure, if you want to do a transition, we need to change the infrastructure. So any transition need to renew or to transform the infrastructure. So infrastructure is at the heart of everything. Now, infrastructure usually means long-term, which means long-term visibility. And for me, the best thing we have to do today is to work together to lower the impact of this different kind of volatility on the performance of our investment. We need to have the lowest cost of capital. The capital is the main driver of the performance, not the only one actually, but the main drivers of the performance of an infrastructure project. And we need to lower the cost of the capital for our infrastructure projects. This is why I think that nothing can happen without infrastructure. So we need them. We need to do our work to lower the cost of capital, asking time to time from sponsoring from government, time to time targeting the relevant investor depending on the risk, on the nature of the investment, on the localization of the investment. So this is the work we have to do, but nothing could happen without infra. So we're going to deliver, actually. I'm sure we're going to deliver.
Infrastructure is crucial. It's the key, actually, something that we cannot do without. So what about the financial sector and how financial investors play a role in this transition?
You know, the most leveraged investment in the world are the infrastructure investment. Some few years ago, it was competing with real estate, but actually now it's infra. So the cost of debt, the capital is key, and among the different layers of capital, the cost of debt is key as well. So the financial sector has to play a significant role in providing to the infrastructure investor the best design and the best cost of capital. But for me, it's only the first thing that we have to do. We have to do more. Actually, when it comes to reducing the cost of capital, it also goes with reducing the risk that is borne by debt and equity. When we say the cost of risk, it means that we need to talk with governments. What are the long-term projects? What are the subsidy that could come from government and supra-international institution? We need to talk to the final users to say if they are willing to help an innovation in infrastructure to happen. So are they able to participate to the investment? And when we talk to the financial institution, we need to give you time to time when it's possible an additional way of hedging the risk through market capital. So we need to offer you options on power, option on gas, long-term option actually. Instead of doing a PPA, it could be a mix between merchant PPA and hedging on the 5 to 10 years on the market. So we need to hedge you on the pricing of critical metals for the transition. So the role of financial institution is, of course, debt. I know that most of you are looking at us as a debt house. We are a debt house. We will continue to be a debt house. But we are also a bank that could help you in reducing the risk of your investment through capital market, which reduces actually the cost of equity and also the cost of debt. The third mission that I think that financial institutions should do is to be able to talk about your business model. When we're talking about volatility, I'm just saying that we don't know what's going to happen in 10 years with solar farms, with PV farms. We don't know what's going to be the use of that. We don't know what's going to happen to gas-fired. We need them, but we don't know what's going to be the reaction. We don't know what's going to be the cost of carbon certificate. So actually, if you mix all of this and you need to raise equity, we should understand your business model and be able to market this business model to the equity investor. We should be able to raise equity and debt for you. So we need to invest massively our time, not only the balance sheet, Christina, to understand your business model and being able to help you raising capital at the relevant price. So this, actually, we have a lot of work to do all together. Again, the key drivers for me are expertise and connectivity. Being able to talk with each of you, talking all together, to share information and share our view on what's going to happen in the coming years. I won't be that long. I'm not talking about 20 years. Huh?
So let's get a little bit more precise about Natixis. You were mentioning edge solutions, suggests opportunities. So how does Natixis support the energy and also the digital transition?
Actually, we started quite a long time ago, quite 10 years ago. We started thinking about our commitment. We started with the balance sheet. I'm not saying it's the easiest portion of our business, but we started with the balance sheet, and we decided that any single loan provided by Natixis should be rated. And we created what we call green weighting factor. I don't know if Orit is in the room. With our Green Hub, we created a Green Hub that is valuing the impact of any loan we are providing to our client, either for dedicated purpose or for corporate, on the ESG factors. Of course, the main driver is decarbonization, but it's not the only one. It could be biodiversity, it could be social as well. So we started doing this. So we are now rating actually more than 95% of our balance sheet, both corporate and dedicated purpose. Then we started to invest in our ECM and DCM teams, We started with green bonds, of course, but we started discussing to investor to know what are the frameworks of the investor, what kind of deals, what kind of underlying project they're willing to invest in. Again, talking about business model. This is key for us. And actually, we need to continue to do this. And the last but not least is that we invested massively since 2020 in providing to our client hedging financial products. So we started trading on power in Europe for the time being. We started trading option on gas as well. We think that gas is part of the transition, at least for a certain period of time, given the volatility of the production of renewable energy facilities. So this is what we started to do. So again, balance sheet is rated and will continue to support all business, all sectors, but the best in class in each sector. So this is the way we are, it's our policy. We cannot stop financing one of the sectors, but we will really provide our capital, our balance sheet to the best in class ESG-wise. Then business models. We did many IPOs of hydrogen, of renewable energy companies. And the last but not least, and it's coming, and it's going to help, I think, they're going to provide the best way to decrease the cost of equity is to have financial products. Because you don't have to negotiate with actors that are really strong when talking to the end users, utilities, or so you talk to the market, and the market will give you the best price. So these are the three layers of our action toward the energy transition, Christina.
So in a wrap-up, any final words to finish?
Actually, we need to massively increase the investment in infrastructure, mainly for energy transition, for decarbonization and digitalization of the economy. The numbers I'm seeing are really huge. So we're gonna talk to all kind of investors, of course, banks, but also private debt and then capital markets. I think that the role, there will be some competition, but given the size of the investment, there will be less competition, but more partnership of these different actors. We are not able to take the same kind of risk. My dream is that with you, we'll be able to structure, discussing together the best design for each project, and talk and raise money from the relevant investor, equity, meds, and senior debt. So this is what we really want to do with you. Again, thank you for your help. I discussed it with many of you. Thank you for your presence here, and thank you for the deals we're going to do together.
Thank you very much, Mohamed Galala. Thank you.